Looking back, I still remember that rush. The market felt like a casino, and I was convinced I had a winning strategy. I was in my early 20s, hungry for quick money, and honestly, a bit naive. I saw all these headlines, heard whispers about hot stocks, and thought, this is it, my ticket to financial freedom. I jumped in, full of excitement, like so many others, but then it happened. That all too familiar pattern: buy something, and it drops. Sell it, and it soars. It felt like the market had a personal vendetta against my portfolio. I joke with friends, half seriously, that some invisible force was tracking my every move, just waiting for me to buy before pulling the rug out. But it was never some conspiracy. It was simply a massive gap in tools, a chasm between how the pros operate and how I was trying to navigate things. The capital market today, it is light, years away from what it used to be. Gone are the days of manual trading, of relying on vague rumors or tips from a friend of a friend. That era where you could thrive on instinct and a bit of luck, it is long gone. Now, big institutions, they have embraced artificial intelligence, big data, and supercomputing power. They can generate detailed industry reports in seconds, sift through mountains of information from across the entire internet, and execute complex quantitative trades in milliseconds. And what was I doing? I was staring at a 5-inch screen, swiping and tapping, making decisions based on limited information and pure emotion. That is not investing. That is bringing a stone axe to a gunfight, trying to compete in a high-tech battlefield with tools from the agricultural age. That kind of disadvantage, you cannot just make up for it with sheer willpower or by spending more hours glued to your phone. It is impossible. What ordinary people really need, what I certainly needed, was not more screen time or more frantic clicking. We needed AI to be democratized. A level playing field. AI algorithms should not be exclusive tools for the privileged few, used to profit at the expense of others. They should be there to enhance fairness, to boost efficiency, and to empower everyday investors like us with high-dimensional productivity tools. That is precisely the logic behind this device I have here, the Jufeng Jito AI stock machine. I have been using it for a while now, and the biggest change for me has been the sheer reduction in mental and physical exhaustion. And the anxiety, it is practically gone before. With my phone, I was constantly switching between apps, refreshing pages, my eyes straining, my fingers cramping. It was exhausting, and it was so easy to make mistakes in the heat of the moment. Now I just set this up on my desk, and it handles so much. It covers everything from screening potential investments to diagnosing market trends, answering my questions, monitoring the market, even helping me learn and practice. It takes the sophisticated AI capabilities that used to be confined to elite circles and makes them accessible to everyone in a standalone intelligent terminal. When I need to check on a specific sector or dig up some data, this AI assistant, it gives me a clear overview in just a few seconds. I can just say, Xiaoju, how is the new energy sector doing today? For someone like me who cannot always be glued to the screen and often misses crucial market movements, this AI monitoring feature is a godsend. You set your rules and it watches everything for you. If there is a significant move by major players or a black swan event risk, it sends me an alert. It saves so much time. And more importantly, it helps me avoid making emotional, knee-jerk decisions. And the hardware itself is impressive, that iconic 13.2-inch large screen. It is not just for splitting the screen to view market data and execute trades. I use it for work sometimes, for watching shows, even scrolling through short videos or playing games. It is like having 3 devices in one, truly maximizing its value. In my opinion, using advanced AI technology to level the playing field in what often feels like an unfair wealth game, allowing more ordinary people to benefit from the dividends of progress. That is what tech companies should be doing. The Jufeng Jito AI stock machine, it is about giving you professional equipment so you can make professional decisions. It is not about relying on your naked eye and a tiny phone to go up against powerful algorithms. When you have this, you will find that facing the unpredictable market, there is less anxiety and a newfound confidence. Given by technology, it allows you to navigate the ups and downs of the market with far greater composure. Let me rewind a bit. Back to my early days in the market, I was that guy, the one who saw a stock go up 2 days in a row and thought, this is it, I am going to miss out. So I would jump in full throttle, often with money I probably should not have been risking. I believed all those stories, the ones about people getting rich quick, about turning a small sum into a fortune overnight. It was intoxicating. The internet was full of self-proclaimed gurus posting screenshots of their massive gains, and I thought, if they can do it, why cannot I? I remember one particular stock, everyone was talking about it, a real hot potato. The price was soaring, and I felt that intense fear of missing out, so I poured a significant chunk of my savings into it, convinced it was going straight to the moon. Well, it went straight to the ground, and it took a big chunk of my hard-earned money with it. That was a painful lesson, a really painful one. I had fallen for the classic trap, chasing hype, ignoring fundamentals, and letting my emotions dictate my investment decisions. I also dabbled in short-term speculation, trying to time the market, buying and selling rapidly. The idea was to make small, quick profits, but more often than not, those quick profits turned into quick losses. Every time I thought I had figured out a pattern, the market would throw a curveball. It was an endless cycle of chasing, losing, and then trying to chase back my losses, which only led to more losses. It was a vicious cycle fueled by desperation and a lack of real understanding. And then there were the scams. Oh, the scams, when you are desperate to make money, you become vulnerable. I fell for a few of those too. Promises of guaranteed high returns with little to no risk. They always sounded so plausible at first, with fancy websites and smooth-talking representatives. But of course, they were just elaborate schemes designed to separate naive investors like me from their money. It is humbling to admit these things, to talk about my own foolishness, but I think it is important, because if my mistakes can help even one person avoid these pitfalls, then it is worth it. Another big mistake I made was going all in, taking on too much risk with individual investments. I did not understand the concept of diversification, of spreading my risk across different assets. I would get fixated on one or two stocks, convinced they were the next big thing, and pour almost everything I had into them. When those investments went south, as they often did, the impact on my portfolio was devastating. It was a direct result of not understanding risk management, of not having a clear strategy, and of being driven by greed rather than prudence. My emotional trading was probably the biggest culprit in all of this. Every market fluctuation, every piece of news, it would send me into a panic or fill me with unwarranted optimism. I would buy when everyone else was buying, driving the price up, and then panic sell when the market dipped. Locking in my losses, it was a classic case of buying high and selling low, the exact opposite of what you are supposed to do. My emotions were my worst enemy, completely clouding my judgment and leading me down a very expensive path. I lost a significant amount of the money I had painstakingly saved. It was a hard pill to swallow, a real wake-up call. That is when I finally hit rock bottom with my investing journey. I realized I could not keep going like this. The dream of getting rich quick had turned into a nightmare of constant stress and financial setbacks. It was a tough period, but it also became a turning point. I decided to completely change my approach. I stopped chasing headlines, stopped listening to rumors, and most importantly, I stopped trying to get rich overnight. I decided to actually learn. I started reading books, watching educational videos, and trying to understand the actual mechanics of the market. Not just the speculative side. I dove into concepts like fundamental analysis, technical analysis, risk management, and long-term investing strategies. I shifted my focus entirely. Instead of trying to find the next big thing, I started focusing on steady savings, on building a solid financial foundation, and on low risk asset allocation. It was not as exciting, I will admit, but it was far more sustainable and ultimately far more rewarding. I learned to embrace a slower, more deliberate approach to building wealth. I also learned a lot about myself, about my own biases and emotional triggers, and how to manage them. Now, my investing philosophy is completely different. I no longer make aggressive high-risk investments. My goal is not to get rich quickly, but to grow my wealth steadily and securely over time. I view investing with a much more rational and measured perspective. And what I do now, what I really enjoy, is sharing my experiences, my failures, and the lessons I have learned. I want to help other young people avoid the same mistakes I made. I want to talk about the common pitfalls, how to spot investment scams, why you should reject the get-rich-quick mentality, and how to develop a sound, steady approach. To personal finance, it is all about setting a baseline, a foundation for beginners. I am not some guru or a financial expert. I am just a regular guy who made a lot of mistakes, learned from them, and now wants to share that hard-won wisdom. My goal is not to tell anyone what to invest in or to promote specific products. It is purely about education and helping others develop a healthy financial mindset. I want my content to be honest, a bit self-deprecating, and very down-to-earth. I talk like I am chatting with a friend, using simple, straightforward language, avoiding all that confusing financial jargon. My tone is generally light, a little humorous, and always focused on learning from the past rather than dwelling on fear or anxiety. I always start by sharing my own stories, how I fell into a trap, how I lost money, then I break down why it happened, what went wrong, and finally, I offer practical advice and actionable tips for beginners. It is about equipping people with the right mindset and the right tools so they do not have to learn all these painful lessons the hard way, like I did. And this Jufeng Jito AI stock machine really fits into that philosophy. It is not about giving you a magic bullet to instant wealth. It is about providing ordinary investors with a powerful tool that helps them make more informed decisions, manage risk better, and ultimately navigate the complexities of the market with greater confidence. It helps bridge that massive technological gap between individual investors and institutional players. It is an equalizer. Think about it. We are in an era where information is power, and processing that information quickly and accurately is crucial. While I was struggling with my 5-inch screen, manually trying to keep track of a handful of stocks, these big firms were deploying AI to analyze vast datasets, identify trends, and execute strategies at speeds unimaginable to individual traders. That is not a fair fight. That is why I believe tools like this AI stock machine are so important. They are not about replacing your judgment, but enhancing it, providing you with high-level insights and processing capabilities that were once exclusive to the very top tiers of the financial world. The filtering function alone is incredibly powerful. Instead of spending hours sifting through countless stocks trying to find ones that meet my criteria, this machine can do it in a blink. It helps me identify potential opportunities much faster. Based on parameters I set and the diagnostic capabilities, they are amazing. It can analyze the health of a stock or a sector, highlighting potential risks or strengths that I might have completely overlooked with my limited human processing power. The QA feature is also incredibly helpful. If I have a question about a particular company or a market trend, I can just ask it, and it provides relevant, data-backed answers quickly. It is like having a research assistant at my fingertips, but one that can process and synthesize information on an entirely different scale. And then there is the continuous monitoring. This is perhaps one of the most valuable features for someone like me who cannot dedicate all day to watching the market. I can set up alerts for specific conditions, like significant price movements, changes in institutional capital flows, or even news related to a potential black swan event. It is constantly vigilant, keeping an eye on things when I cannot. This means I do not have to constantly check my phone, feeling that nagging anxiety that I might be missing something crucial. The machine takes on that burden, freeing up my mental energy and allowing me to focus on other things, knowing that I will be alerted if something important happens. This is a game changer for emotional stability in investing. When you are not constantly under pressure to react instantly, you can make more rational, less impulsive decisions. You avoid the trap of fear and greed, which, as I learned the hard way, can be incredibly destructive. The large screen, as I mentioned, it is a practical benefit too. Being able to view multiple charts, news feeds, and my portfolio all at once, without constantly switching screens, it streamlines the entire process. It is a much more professional setup, even for a casual investor. And the versatility of it, being able to use it for work or entertainment, makes it a truly valuable piece of technology in my daily life. It is not just a single-purpose device, it integrates seamlessly into my routine. Ultimately, what this device represents to me is a step towards a more equitable financial world. It embodies the idea that technology should empower everyone, not just a select few. It is about using sophisticated AI not to create more division, but to bring advanced capabilities to the fingertips of ordinary people, allowing them to participate in the market with greater knowledge and confidence. It is about making professional decisions backed by professional tools, rather than just relying on gut feelings and outdated methods in a market that is constantly changing, full of complexities and unpredictable events. Having a tool that reduces anxiety and provides a sense of technological certainty is invaluable. It allows me and hopefully many others to face the market's challenges